Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Let's take a look at what's playing out across the session. And we've got a bit of green on the screen. The S&P 500 up 0.4%. The Nasdaq Composite climbing 0.3%. And the Dow Jones Industrial Average squeezing out a small gain of 0.2% to hit a new high, 46,398. And all this as investors shake off all the worries about what I've been hearing about a potential U.S. government shutdown and also round up an unusually strong September. Now let's check in with José Torres. He is the senior economist for Interactive Brokers. Good morning, Jose. How are you doing today?
Good morning, Ryan. Great to be here. Doing great. How are you?
I'm doing great as well, but we've got a lot to unpack here because it's quite a familiar story when it comes to the U.S. government shutdown. Is it a factor now that they've seen it before and now they've shaken off all the potential worries on implications perhaps? Now, because we are seeing markets go up, but you've got this looming in the next few hours, the government running out of cash. Or funding at least. What do you take away from the latest market action?
Yeah, well, in the beginning of the session, we had a lot of risk-off trading. We had investors buy Treasuries. They were buying gold bars. They were purchasing volatility protection instruments. And stocks were actually going down, particularly the small caps, the more speculative areas. Bitcoin was sinking more than 1%. Then in the afternoon, I think it was a quarter end effect. This was the end of the quarter, and stocks soared, near all-time highs for the Dow and, close to that for the Nasdaq 100 as well as for the S&P 500. As far as investor conditioning, a lot of these discussions, they really tend to go down to the wire. Sometimes a deal is made in the last hour, last half an hour, and market participants really over the years haven't really seen that negative of a financial market effect or economic effect from the government shutdown. But here, the key point here is that for market bulls in equities, we really want a short shutdown here because there are some softening areas of the economy. The economy is doing great overall, but the labor market particularly has been decelerating. So when you have a lot of loss of incomes and jobs for the time being and perhaps even permanent, that could start to weigh on short-term economic conditions. Our prediction market has an 87% chance that the government will shut down at midnight U.S. New York time.
All right, 80% chance of that happening. Now, Jose, you've seen this happen before, a government shutdown, and then, of course, like you mentioned, a deal being done at the last minute. How worried are you this time, and what is the significance of this time around?
I think that I'm always worried about when the government shuts down, but this time I think that the White House is really looking to reduce the federal workforce. We know in the beginning of the Trump administration, we had CEO Tesla, Elon Musk, really drive the government efficiency efforts. And then that was sort of abandoned, Ryan, after about 2 months, So now that was roughly March or April. Now we're in September, October, and now it seems that, President Trump is going that way again in the government efficiency perspective, which is essentially to trim federal workers. And some of the moves are looking like they could be permanent. A lot of it is going to go through the courts. So I'm worried about in the short term. I think that the government could get smaller and a lot of those workers could go to the private sector. But I think in the short run, that would cause some disruptions with the labor market, weigh on consumption and maybe push up unemployment a point or two.
Okay, let's talk about the labor market, where that is heading as you look at some of the numbers. By and large, what are you seeing when it comes to the trajectory? Where are we looking at when it comes to the next quarter?
Yeah, so we're in a low hiring, low firing kind of landscape where employers aren't necessarily bringing on a lot of workers, but they're not getting rid of the ones they have. Against that backdrop, immigration has been a huge headwind for the labor market from a labor supply perspective because you don't have that labor pool that you had last year. And then also affecting the demand side because those immigrants were also consumers. So it's really a confusing labor market at this juncture. Still solid, not terrible, but decelerating, and it is worrisome. We got data this morning in the U.S. of job openings coming in above expectations. That was good news, but then we saw consumer confidence decline significantly, and part of that was because of employment conditions. Households are having a rougher time acquiring employment, and they feel a little more pessimistic about their job security. I think if we can get past this shutdown, get a rate cut in October and December, I think we'll get a reacceleration in the labor market. And even though there's a high chance that we won't get the unemployment claim data on Thursday or the non-farm payrolls main event on Friday, Ryan, I think the main event has shifted to Wednesday's ADP employment report since we're not going to hear from the government. We'll also have some ISM manufacturing, S&P global PMIs as well for services and manufacturing. So we have some data to comb through, albeit it's not going to be the major releases from the U.S. government.
Yeah, Jose, talking about PMI data and what we can track on that front, we've got China with their PMIs, and looking at some of the past indicators or data points, it looks like they are still going through a bit of a sluggish time on the surface at least. What are you taking away with the latest data points? And of course, with the tariffs still perhaps a big issue, how much of that has played out in terms of the data that you're seeing right now?
Yeah, no, absolutely. The Chinese manufacturing sector has really had trouble dealing with the elevated tariffs that the U.S. has on its imports. So there's been disturbances in terms of finding new purchasers. There's been cost wars, of course, trying to move those goods. There's been pricing power has been depleted. When you look at the producer price index for China, very, very weak because manufacturers have way too much inventory. Also high interest rates around the world. That's still also weighing on the manufacturing sector overall, expecting to see still a contraction here, turning here across the Pacific to the U.S. now. In the manufacturing sector in the U.S. has done great from an investment and an onshoring perspective, but employment and orders have been terrible. So manufacturers aren't really picking up a lot of workers, and also the orders really aren't there. And a lot of it is, Ryan, is to the discussion you were having earlier. Manufacturing is becoming more of an automation-heavy kind of industry, so you could grow manufacturing without necessarily hiring more employees. We've been noticing that in the U.S. since the 2008 great financial crisis, where manufacturing jobs just can't really seem to gain much steam.
All right, lots to track in the coming quarter. And of course, we've been in conversation with José Torres. He is the senior economist for Interactive Brokers. Jose, thanks as always for your time. Great chatting with you.
Absolutely, Ryan. Great seeing you all. Have a great day.
You too. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.3.